All right. Hello, everyone. Welcome to my YouTube channel. My name is Wall Street Sophia. If you don't already know me, I am a day trader full time, and I also do a lot of education as well. Throughout my channel, I post, trade analysis, my entire strategy, risk management, everything you would need to know about day trading. So if you're new here, welcome in. For the people who always watch me, thank you guys so much. Thank you for all the support. I really appreciate it. But today's YouTube video is going to be super, super important. I know you guys who already follow me on Instagram, see my trade recaps, see the trades that I'm taking, and you may be wondering how I get those entries, how I'm able to have a higher risk to reward ratio while also keeping a very good win rate. And I'm going to be taking you through that today and my entry models that I use specifically for trading, and also taking you through some back testing on those. So anyways, let's get right into the video. So if you don't already know the strategy that I use, which I have multiple videos on, I use a mix of support, resistance, key levels, supply demand zones, and also volume. So with that, grants me my entry models. Now, I'm not going to be going through that today because I want to keep this video short and sweet, just specifically focused on entries. So if you do, need a little bit of backstory on my strategy, make sure to go watch one of my strategy videos. But anyways, let's get into it. So my 3 entry models. The first entry model is actually not my favorite entry model. It's one that is useful. It's one that a lot of people do use. I personally do not get my best entries from using this first entry model, but of course it is important, and of course I use it here and there. So for this entry model, it is going to be trading breaks on support or resistance levels. What you want to see going into this entry model is on the 5-minute time frame, you want to see a full displacement candle, meaning if we are trading the break of resistance, we want to see a large bullish candle breaking above our resistance level and holding above it on a 5-minute time frame to then take our entry for the trade to continue higher. And that is off of our resistance level. So that is the entry model right on this left side. We see this line here. That is our upper level. And what we're trading is basically a breakout. So a break above this resistance level, looking for price to continue higher. Now, this is not my favorite entry model because it doesn't grant you the higher risk to reward ratio that I'm normally going for. Does it have a good win rate on it? If you use it correctly, absolutely. But once again, I'm going for higher risk to reward trades. So not my favorite entry model, but it is still great to use. Now, vice versa, when trading a break on a support level, you want to see a large displacement candle that is bearish, showing us that trend is going to keep continuing below our support and continuing lower. So you do want to see a break on the 5-minute time frame and a displacement candle holding below our level to enter, continuous downside. Now, why are these entry models not my favorite? Well, it just doesn't give you the best probability of entry point, and I'll explain exactly why. Now, for my next entry model, which is going to be trading bounces on support, this is one of my favorite entry models. So how exactly are you going to trade this? So you take out a key level on the hourly, 4-hour, daily time frame of your support resistance. 30-minute, you take out your supply demand zones. Again, I have more on this in other videos if you're a little bit confused right now. But you want to find your key levels, and what you want to ideally see on the 5-minute time frame is for price to actually trade lower, trade into your support level. You need to see price actually hold up your support level. We need to get bullish volume at this lower support level and then take the bounce off of support. The volume really confirms that we are going to continue higher, and getting a 5-minute bullish displacement candle from our support level as well. Now, this grants you the highest zone, the highest probability entry for that day that you are trading in, because this is the lowest point that we will most likely see, this first support level. On a day that's super bearish, though, and price is just continuing downwards the whole entire day, this might be a time where you do not want to take that entry, but it's always about context. Is price just continuing to dump? Yes, then maybe you don't want to take a bounce because we potentially will not be bouncing at any support levels anyways. So the next entry model, which is, very alike to trading a bounce on support, is just the opposite. It is trading rejects on resistance. Now, what you want to see is for price to trade higher into our key level that we found on a higher time frame. So we found this key level on a higher time frame. We're looking at the 5-minute, and we want to see price trade higher into our resistance level that we have marked out. Now, when we see this, we also want to see price and volume start to turn bearish. We want to see a 5-minute displacement candle, bearish displacement candle, moving away from our resistance level to take that reject and to see price continue lower. So once again, this will give you one of the highest entry points and highest probability points because you're taking a reject from a higher zone, a higher level, maybe high of day as well. So this will give you a really high probability entry. Now, on a day where price may be just continuing higher, super bullish, again, you need to look at context. That might not be a day where you just want to try to take a reject because you're not going to get the win rate or the risk to reward ratio that you're potentially looking for. So what I call my 3 entry models is the BBR, break, bounce, reject strategy. It is exactly what I use to enter all of my trades in. Now, for some real examples, the first one here, we have the break of resistance model. So as you see here, price is trading below this first resistance level here, and we also have a nice supply zone. So what do we see? We see price break above that resistance / supply zone, and we actually get a retest back into it. Why is this so important? We actually don't see a displacement candle holding above that resistance level. Why don't we see a displacement candle? Well, this first candle right here is not holding above our resistance level. It is a displacement candle, but it's the one that broke through. The next couple of candles weren't showing strength or momentum. So what we wanted to see was a retest into there. We take it once we see this candle forming. We have volume that is also bullish. And then our exit would be at the next volume high or our next level up. Now, the next model, which is our bounce on support level. So what we see here is price trading above this support / demand zone, and we see price trade down into it. We get a really beautiful bounce with a lot of bullish volume right here. And we take that once we see this candle forming, this nice displacement candle, and take profit at our next level up. So beautiful example there. And our third model is this reject of resistance. So what we see right now is price kind of trading and consolidating around this resistance level and also supply zone. So ideally, we see price trade up into it. We get a very clean and firm reject. We take our trade once we see this candle form. Lots of sellers as well, which was really great conviction. And exit at the next volume high area, which is right here, or any next level that you have marked out, which will be a support level or lower level. So again, don't overcomplicate it. Easy enough, but I'm going to go through some back testing right now with you guys. All right, so I picked out a day to back test, and I don't even know what happens this day. It's Tuesday, November 25th. And so right now I'm in the hourly time frame, and what I'm going to do is I'm going to pick out some levels, and this is pre-market. So I'm picking out my pre-market levels, and then after that I'm going to go through, pick out some supply demand zones, and then we're going to go through on the 5-minute to market open, and I'm going to back test that and take a potential entry on any trades that I see fit. So first thing I'm going to do is mark out some levels. So first one that I see here, which is going to be our support level, is back down around 597. And the reason being is because if I go far back enough, we've seen price actually bounce around this level multiple times. We've seen price tap into it. That's how I find my strong key levels. So there you have it. We have that strong level there. And for a nice resistance level as well, one that I really think is a good area and point is going to be 610 on QQQ. So we're currently trading around 603 right here. But besides that, there's not too many other valid areas besides potentially 605 on QQQ, which could be used as another point of resistance, which I'll mark out right here as well, where we've also seen like either bounces here, we've seen rejects here, we've seen rejects here, rejects, all of that good stuff. So now let me go into the 30-minute time frame. So in the 30-minute time frame, what I'm going to do is pick out some supply and demand zones. So the first zone that I see that is pretty prominent is obviously up here, closer to 612, where we've seen a lot of really great rejection points up at these higher areas. And we also obviously have another supply zone up here as well, closer to 605 to 607. And then we also have this nice demand zone a little bit lower down in this little spot and area. So we have all of our levels there, and I'm going to go ahead and skip to market open. All right, so now that I've skipped to market open and I'm in the 5-minute time frame, as we see, prices in between these two key levels. So what I'm going to do, and I have my volume up here. If you guys want to get that indicator, it's just called visible range volume profile on TradingView. But anyways, since we're trading in between these two levels, I'm going to wait for either a reject or a bounce from either of these levels. So I'm going to wait to see for price to either come down to this 600 area down here and bounce off of this key level, or I'm going to wait for price to trade up into 605 and get a reject from there. So let's skip through and see what happens. This is the, first candle of market open this day. So as we see, price is already starting to trade lower. And again, I'm going to look for price to hopefully tap into this level and get a nice bounce setup from there. Wow, so price really started to fall here, as you can see, and our volume's going to be messed up because it doesn't work that well when you're back testing. So we might kind of have to, leave volume alone from here. So as we see, we already are getting this bounce off of our key level. So that isn't my ideal entry. So I'm going to put my entry a little bit lower. And of course I trade options, but I cannot trade options when I'm back testing. So let's say, for example, I'm going to set a limit order down here to buy right there. So I'm going to keep replaying and see if we could tap into that area. So we do continue higher. Oh, and then we get tapped in. So what I'm going to do is I'm going to place my stop loss below our recent low, which is right here. And then my take profit is going to be at our next level up. So I'm going to confirm that. And let's continue on. And we're continuing higher, which is nice. But let's see where price goes from here. We got a little bit of consolidation there. It's normal. And for now, we're just waiting. Little bit of consolidation. And I'm going to wait and stay patient to see if we do take out this level. There you have it. So as you see here, it is also important to be very patient. We saw price take off right away from our support level. And you don't want to get in too soon or, at a bad time and just like hopium entry. You need to wait. You need to stay patient. See if we could, come back close to our support level to get your entry. And we did. We stayed patient. We got our entry there. We have the proper volume. It worked out. So that is an example of the bounce setup, taking you guys through, taking out my levels, supply and demand zones, all of that good stuff. But anyways, thank you guys so much for watching, and I will see you on the next video. Make sure to subscribe and like this video if you guys want to see more. I also have my Discord linked in the description. If you guys want daily analysis and live classroom education sessions and, access to ask questions anytime you want to me, that is linked in the description of the video. But anyways, thank you guys so much again for watching, and I will see you all next time.